Hey, it's Mac with PriceActionTradingSystem.com, and it's Thursday. It is March 28th. This will be our chart lesson for the day, and this is going to wrap it up for our week. No chart lessons on Fridays. Pretty good day today. It started out uphill. We had two legs up, and then we had a nice little correction, and then really this is a range type day. We didn't trade. We got outside the overnight highs and lows, but we still had a high and a low, and we traded basically in the middle of that. But we traded up, down, and then we just kind of traded within the middle of that high and low the rest of the day. So it's a type of a range day. It's not a specific range day, but I'm trying to think of the best way to describe this. Generally, your range days are you're going to trade most of the day inside your overnight high and your overnight lows. In this case, your overnight high is right here, and you see we got outside of that a little bit, but for the most part, the rest of the day traded within the inside of that. So it's still, for all intents and purposes, this is a range type day. There's not a clear, consistent support area that it bounces off, or a clear, consistent resistance area. We just traded up, and then we traded down, and we traded back up. And so anyway, it was fairly easy to find most of your trends here. So this shouldn't have been too difficult today. But let's back out here and go over the trades. Early on, we had this much steeper two-tiered channel, which is generally a little bit too steep. But notice we got to break that, a new high, and then we ran up another high. If you measure this first leg here, and then your second leg from there, we came up a little bit short. But I also, once we started high from this point right in here, you should have measured this leg and then came to here for your leg two. And it gives you the same target basically. And so that generally is a pretty good idea of what your target's going to be. And you can see we didn't quite get there. We came close. We missed it by we might have missed it by a point or two, it looks like. But that's pretty close. So that would have given you a nice near-term target to work towards till this thing reversed. So a couple of different ways that I look at it there and look for, people always ask me, how do you find your target? Well, that's how we do it. So we'll get those out of the way. But generally on a range day, a trend day, when the trend is too steep, you will level off a little bit, because generally you want a 45-degree angle as a nice healthy trend. So this is more healthy, but it didn't last very long. It lasted till about just right, maybe 9:30 or so, a little after 9:30. So the first hour of trading, then we traded down until maybe the next hour and a half to 2 hours. Then we traded up the rest. Well, we traded up a little bit and then sideways. I'd still consider this all up for the day. Your bias is still up here. So those days are hard for some people because you have to switch gears, and it's not as easy as a range day in my opinion. But you should be able to figure these days out fairly easily. You might get fooled here in the transition area, but once you start trending like this, and then once you start going sideways, then you got to be concerned, and then then you transition again here. So the transition areas may be a little bit more difficult, but anyway, let's talk about the trades and we'll wrap it up. We'll wrap up our week. So it was a little slow again. I don't know what the deal has been, but lately the mornings have been slower, and it's the afternoons that seem to be doing better. Don't ask me why. That's just the way the markets are. So anyway, first trade I saw was at 7 o'clock. I think it was right up through here on this bounce, and then we come back. And this is really two legs back. There's actually a second. If you start from this double top, there's a first entry, then a second entry. Not a good signal bar here. I would say jump all over this, but it's not a very good setup. But then you make a higher low right here, and on a bigger picture, that's two legs back. Nice bullish bar. It's the first close outside this trend line, so we're probably going to go on up. So I like that one. There's another little pullback right here, but there's too much sideways action, too many up-down bars. That's real tempting, and you see it would have worked, but I think you want a better setup than that. There's actually a failed second entry short. Actually, it doesn't tick lower, but there's still 2 legs up and a correction right here that bounces off that key entry point. But I don't think you want to go long into that high of the day right there. And notice how it pushes up and it quickly reverses. And then you got a new low right here, and then you get a first entry and then a second entry short, and that fails, and it confirms that trend line right there. I like going long 1 tick above that bar. And that was a quick, easy move, and then we're just kind of, we're much more sideways here, but we're still trending up. And it looked like it was 2 tiers here, but maybe it wasn't. It looks like it's just a 1 tier, and then you get an overshoot and a reversal. But I would be playing this equal distance since it does tend to fit. Just, I'd be watching for that, in other words. So, but notice we made a new low, then first entry, second entry. So there's another failed second entry short. The only problem is we just came off the highs twice. There's probably a midline in there, and it's probably playing off that. You drag that down, you can see that. We'll actually make that one make this a solid one. I guess I could have just flip-flopped them, but so you can see that. So there's a nice failed second entry short right off the midline, and more importantly, you got the EMA there too. So it's good for a scalp. It does come on back and it bounces right here. Not a very good. There's a nice second entry long right there, but not a very good signal bar. If you had a good signal bar, there's a great setup right there. There's a higher low right here. Again, very bearish signal bar. And now we get that overshoot, and then notice how we make that high, come back first entry, pull back. There's a second entry long right there. Generally, I would say this one's a little, you'd have to be careful with this one, but we got another little secondary channel working up, and that's the first break. So we're probably going to shoot up and try to make a new high. So I like that one. And then we pull back first entry, and you pull back second entry. And you also could treat this like a second entry long because this swing is higher than that one. So you get a new count right there, and then first entry, and then you come back second entry. So it's a failed second entry short. You can treat it like a second entry long. And where does it run? Right up to the highs again, and then we reverse. And you get a first entry, and then you shoot on down with your second leg, and you get a second entry, and it fails. Nice bearish bar. I like. You probably got a trap going right there. You'd really think that would take on off, but it didn't. It actually came back one more time, and it broke higher and then turned down. I didn't mark this trade, but actually it didn't break higher there. It just made a 2-bar matching high, and it turns down. If it would have broke higher and then turned down, I probably would have at least made that green. And you probably could still argue for this because it does confirm that trend line. Only problem is you don't have a lot of room there. You got a lot of stems, and this signal bar is not very good. And by the time this one closes, you got a double bottom. So I didn't mark that one. Like I said, if it would have broke higher and then turned down, I wouldn't have had a problem putting a sell stop right there. Or if it would have broke higher right there and turned down, maybe. But just no good way to catch that one. And then notice you make a new low, pull back first entry, pull back second entry, nice bearish bar right off the trend line, the EMA. That's a textbook second entry short. Look at it go. Then it pulls back here and gives you a big bearish bar. I made that one green. It's off that key entry point. You do have some up-down bars there. You have to go short at the low of the day. There's some reasons to be concerned about it, so I only made it green. By this time, you're still not down to the lows. This is a failed second entry long. There is a shorter term trend line, but we do have a break and a new low in place. You could probably argue for that one to be green. But if it had been off the key entry point or the EMA, even being right at the low of the day, I probably would have said, yeah, take that trade. But with it being there, I think it's pretty risky. So then notice what happens. You bounce off the low, first entry, second entry, you get another second entry short. That's really the first close outside, so we're probably going to try to make a new low. So with that being a second entry, take that trade. And then we bounce, and we actually turns out we're going sideways here. And you get a little failed breakout here. So you may take that one just to run it back to the EMA or come back to the former resistance, see if it acts as support. So that's a possibility. You're better off to wait on that lower high, and then notice we make a low there. First entry, second entry, that's your better entry right there. And you get that little 3 bar, 4 bars there, and it breaks higher and fails, and it runs on down there and makes a new low, and then it reverses. And this is a failed break lower here, so a little bit away from the EMA. So you may ride that one back. Your entry is actually 1 tick above that bar. You got plenty of room to go back, and like I always talk about, this failure here or this failure here could either one turn out to be an important low or high of the day. This wasn't anything like this one, but it still was a nice high. Look at the move you got off of. I mean, that's a 28.08 down to 28.02. That's a quick 6-point move. But look at this one. If you catch this failed break lower, this is the low of the day, and look at that move back up. You know, even if you're getting out at before 2 o'clock, if you just rode it up, I mean, that's 28.15 from, you know, that's a 13-point move right there. And that's what happens. You know, on these failures, I like to. They're a little aggressive, but if you catch one, you usually get a runner, and sometimes it'll be an important low or high of the day. You're being a little aggressive, but you know there is the fact that you get rewarded for being aggressive occasionally. So you just need to know what you're doing. So keep that in mind. It's not for. It's like, you know, another thing that made me think about before I move on here to the next trade. I get this question. I have this a lot. You get the newbies and they're working on the second entries, and they don't quite have the second entries down. Second entries are really, really simple, but people complicate them for whatever reason, and because they're just hard to describe and hard to get, and so people make them much more difficult than need be, and so they struggle trying to figure out what a second entry really is. And then they start throwing in failed second entries, and they hadn't even really figured out second entries, and they're just confusing themselves. And that's why I don't talk about in the manual about second entries, because you need to learn, or failed second entries at all, because I don't want you even thinking about failures until you understand a second entry. When you get a really good understanding of a second entry, failures are just become second nature. It won't be any thinking to them at all. You will notice them and you will spot them. So just don't worry if you're new to this and you hadn't been doing it very long. Don't worry so much about failures. Only place I would say you should be interested in failures are at reversal areas, like right here, which I'm fixing to talk about. This is a failed second entry short at a reversal area. This is a failed second entry short at a reversal area. So that's about the only place I would tell you that you might look for them. Otherwise, if they're in the trend and otherwise, just don't even think about them. Just concentrate on second entries. The market and the idea behind the second entries, and this sometimes simplifies it for people, is that the idea behind second entries is the market tends to move in twos, so you get 2 legs. So if you got a trend working down and you suddenly get 2 legs of correction, you're probably going down again. And that's the whole idea behind our measured moves and all. The market moves in twos. So if we look for one, if we find one leg, and then once the second one starts, we got a good idea of how far it's going based on the first leg. So keep that in mind. That's really the genesis of second entries, is the fact that the market moves in twos and there's usually 2 legs. So, I mean, it's like everything. Nothing's 100%, and you got to learn to spot them. And, you know, a lot of people, it takes them a while to do that. So, but that, just remind yourself of that when you're looking for second entries. So, that way you can find the sure things. It makes it easier. But anyway, the failed break here, and then you're running up, and where do you find resistance? Back at the top of this little range, and you get a first entry, then it shoots through and pulls back and tests it. Gives you a failed second entry short and goes higher. That's what you want to see on a breakout. You want to see this form of resistance act as support. And generally, you want to see it, I mean, like right here, you get a little support too, but you're still in a downtrend then. And we're looking for a reversal here. And so that's why that one's, you know, you got to look at that whole context as well. So here you got a failed break lower, and so you're probably going to go the other way. Here you got a failed break higher, so you're probably going to go the other way. So this is a failed break higher. Here, a possible fail. This is what happens. Even on a trend that's going to continue on, it comes back and tests it. And that's what happens here. It doesn't go very far. It comes back and tests it. And it's a failed second entry short. And so I like that one right there because we're probably going to at least make another leg up. And then you come back here. There's actually a hidden second entry right here. Notice that new high, and you pull back. First entry, you pull back again. Second entry. If you went to a little smaller chart, you'd see two legs right there. So there's a hidden second entry. I didn't mark it because that's getting way too complicated for a lot of people. But there's a hidden second entry there, and it's right off a possible key. I drew this trend line off these highs and drug it down. And where does it bounce? Right off of it. And it makes a little 2-bar matching low as well. You got two legs in there. That's a good little entry. So, and look at it go. Then we come back. There's actually another little second entry right here. Pull back first entry, pull back second entry. Same thing, another little hidden second entry. So you could argue the same thing right there when it broke above. The only problem is this is your signal bar. And when it broke above here is where it's a second entry. So, and signal, inside bars tend to fail a lot. So then you get a higher low right here, but there's not much room to the top. It's not a very good signal bar, and you see what happens. It quickly fails. But now look what happens. You got a double bottom, but notice that low, first entry, second entry, and you're bouncing off strong support there. You're bouncing off the EMA. That's a chance to ride it back to the top, and run back to the top. And what does it do? It gets through, but it fails. And I probably would move this at that point up to here, and it's just working along. And if that was really bearish, and then or this one was not a doji and a little bearish, I'd say go short there. This is one you might, because now you got a break of this channel. You got to move to a new high, and then you try to go higher 2 more times. So that's a failed second entry long right there. So there's another one that I'll mark green, because you're always better off to wait on the lower high, which comes here, but that's a perfect doji. I mean, if that was a bearish bar, I'd say go short right there and look to ride it back down. And what does it do? It hits the bottom of the range, and it bounces again. And this time, notice you made that low. You test it once, you test it twice. You got a nice bullish bar. Plus, this is really a little double top here, so you're moving down first entry, moving down second entry. So there's 2 legs down and second entry long, and look at it go. So anyway, that's what I saw today. Not as many trades, but still, like I said, the afternoons have, generally all the actions in the mornings and the afternoons are generally boring. Last couple of weeks, we've seen some really good afternoons and some really slow mornings where you just had to sit and be patient. So, not sure. I mean, on this, actually today, it's probably not a good description of that because there's some good movement here. There just weren't a lot of good signal bars. That's the problem here mainly today, I think, because there's a lot of setups here. There just wasn't really good signal bars. So anyway, that's what we had today. That's going to wrap up our week. I did want to share something. Let me find it here. There were 2 emails I wanted to share. Let me pause it here just a minute, and I'll be right back. Okay, another. This lady sent me her email, or sent me an email, and she's basically just telling me about her trading. And I like to share this because it gives people encouragement when they're struggling. So, but anyway, she writes to me and she says, "Let me give you a praise report while I'm at it. I've been sim trading with a goal of 5,000 since last Monday. Today is my 8th consecutive day of meeting and/or exceeding my daily goal of $200 net after commissions and fees." Now, it does say she's sim trading, but if you can do this sim trading, following the rules, you can do it live. You may not be able to just flip the switch and go straight live, but if you can do it on sim, you've proven that you're getting good enough to do this, and then you got to work on the mental aspect of trading with live money. So there's still another step, but this is still very encouraging. and it shows it can be done. She continues, I am finally disciplining myself to stay out of the market until I see a good setup. There you go. I talk about that all the time, being patient and disciplined and being able to wait on the trades and not chase trades. She's getting it here. Your trading strategy has been a godsend for me. I read your manual. This is the part I really want you to see. Not only does she have success, but listen to this part. I read your manual regularly and watch both your old and your new videos daily, even on weekends. This is what I always say right here. It is amazing how every time I read the manual, I see something I hadn't seen before. And I try to tell people that. You know, people will write to me and say, how many pages are in your manual? And I tell them 85 pages, and they think, oh, 85 pages, what can you learn in 80? But I promise you, there's no fluff. There's everything in that manual is important. And there's no fluff in there, really. So every time you read it, and there's so much in there, you can't read it once or twice and get it all, because some of it will seem very trivial, but each piece builds, some pieces build upon other pieces. So read that thing over and over like a study guide. Don't read it like a book that you read through once or twice and you put aside, because you're shorting yourself. And I'd be shocked if half the people that buy it don't read it once, set it down, and start trying to trade and figure this out, and then they give up. And they didn't learn. They haven't picked up a fraction of what they need to know yet. So this is why she's having success, because she's reading the manual over and over, and she's studying every day, and she's studying her charts. She's also on the sim and not trying to go live. Stay on the sim until you can double a $5,000 or $10,000 account, and then consider going live. Because if you can't do it on sim, you can't do it live. Trust me. I was failing miserably prior to adopting you as my mentor. I'm 63 years old, and quite truthfully, I desperately needed a simple, effective strategy because my memory is not what it used to be. It is a shame that so many people complicate the trading process. Maybe they do it intentionally to discourage new traders. Nonetheless, I am so excited about finally learning how to read price action and not using all the indicators that everyone else says you have to have. And that brings up another point. Most of the people I think that teach trading or sell stuff that's trading, some of them are just pure snake oil salesmen. There's no doubt about that. But I think most people have good intentions. The problem is they don't really have a full understanding of trading either. I'm trying to think of how to say this, but they can read the books and spout the buzzwords and the rules that, there's so many rules that you read and all that are just, and it's all hogwash. But it's become so central. It's become the gospel almost, but it's wrong. And so people are teaching the gospel, and that's why if you actually go with something that works into one of these forums and try to convince people that's how they ought to be trading, they'll hang you by your toes and ostracize you, and you're the only one that really would be talking about the right stuff, but yet you would be an outcast. And I'm telling you, I see it happen over. Profitable traders that know what they're doing do not hang out in forums and trading groups. So take that from me, and trust me when I tell you that is true. So anyway, let me finish her email, and we'll wrap this up. I'm not going to read the rest of this. The rest of it, she's just giving me some compliments, and I don't want to read this. I'm not trying to toot my horn. I just want to share with you people that are having success, and people that and what they're doing more or less to have that success. So it's this, I'm not reading this to say, see, I told you so, I know what I'm talking about. That has nothing to do with it. So it's not about me. I'm just wanting you to see. I like to read messages where people are having success because it encourages other people, but I also want, when I read some of these words, it sounds like me talking, or some of these comments that sound like me talking, like I read the manual over and over, and every time I read it, I learn something new. Well, how many times have I said that in videos, and people just don't get it? But she's getting it, and that's why she's having success. So anyway, thanks for sharing that with us, and hope you didn't mind me sharing it with the rest of the group. So there's one other email I want to share here as well, and this is not a success story. This is I talk about the gap on the daily chart that happened. We had one today. It wasn't a very big one. This is where the market closed yesterday, and so this is all in the blue, is all overnight trading. This was the 8:30 open right here. So this is where the market opened today. So if you hide everything in between there, we closed here and opened here. So there's a gap between this level and this level. And that's what I'm talking about when I talk about a gap on the day. It would only be on the daily chart, because the daily opens at 8:30 and closes at 3:15, where the 24-hour trades all the time. So there's not a gap on this chart, but it's still important on the daily chart, because that's stuff. There's people that follow that only, and they don't. And the markets do not like gaps on the chart. They will try to fill them quickly. So you can see today we filled it really. Well, actually we went higher before we came back and filled it, or did we fill it? We actually, notice where this came back to. That's a really important. That came back just enough to fill that gap, and then it went higher again. I mean, I see that over and over, and so that's probably what this big sell-off was, filling that gap, and then the gap's filled, and the trend could have continued. It didn't, but it could have. So generally, those gaps will fill really quickly, and you can see this one was filled. We opened at 8:30, and this gap was filled today by 8:35. So in 5 minutes, they filled the gap, and then trading resumed. And look how fast that sell-off was. But anyway, where I'm going with this is we've got a guy that writes some indicators and stuff for some of this stuff, and he told me that he's written something here about a daily open gap charted. It's some kind of little indicator he wrote here for a NinjaTrader. So when I get a chance, I will update this. I will upload this little indicator to the website. I haven't had a chance to do it yet, but I will update it to the member section. If you're a member, you can download it for free or whatever. So I haven't had a chance to look at it. There's actually some other indicators that will plot your open, yesterday's close, yesterday's high, and yesterday's low, because all of those levels are important. If you go back and look, you'll see them retested over and over and stuff like that again. So there's already an indicator, a standard indicator that comes with NinjaTrader, and probably a lot of trading software already have an indicator that will plot that for you. So if you want to put those on there, they're great to have and to know, because that would have given you an idea of what prices were while they bounced here today. They came back and filled that gap. Let me put that on there. You can see that to the tick. That's where it closed. Actually, prices closed here, but that's where they traded to yesterday, and that's exactly where you can see. I'll move this over here. That's exactly where prices came back to, right there. And if you look across there, you can see where prices were at yesterday. So we actually missed filling the gap by a single tick, so which is not that big a deal in the big scheme of things. So anyway, I'll try to get that up to the site. It'll probably be next week before it's available. I'm going to be out of pocket this weekend, so and I'm leaving early tomorrow. But anyway, wanted to just share that with you and talk about it. And again, if you want to put something, if you want to look, there's an indicator on there that plots it already. Let's see if we can find it here. I think it's called previous days. Price, open, high, low, close. Let me just put it on there real quick. Well, where'd you go? For some reason it didn't. Let's try it again. Maybe I hit OK too soon. There we go. You can see it from. It won't show today's because today it's just getting started in the new day. But you can see the open. I guess that was, or maybe that was yesterday's close. This is probably, one of these is open, one of these was previous day's open and high. So this day's is actually coming from somewhere over there. So it won't look right until you put it on there at the start of the trading day. So you can see this is probably some kind of high from the previous day. But anyway, if you put it on there first thing in the morning, it'll make more sense. But it shows you the previous days, open, high, low, and close. And those are all important areas, and you'll see prices. I mean, actually, let me just look here. You can see where prices went back to it today. You can see where we kind of worked around that. Look how that price was acting as support and resistance. We didn't get back down to here, but and look at it the day before. Look how prices are working around that. Look how it came into play right across here. You can see it acting as support and resistance up here. I mean, it's just, it's amazing how those areas are important the following day. So anyway, I didn't mean to drag this video out that long, but I meant to talk about that yesterday, and I didn't, so I thought I would throw it in there today. But I'm going to wrap it up. This is 30 minutes worth, and I didn't mean to, you know me, I always say I'm going to keep these videos at 10 minutes, but that never happens. So I'm going to wrap it up. That's going to do it for our week. I'll be back Monday, so we'll see you again Monday. I'm done for today. This is Matt with PriceActionTradingSystem.com, and we'll see you next time.